All right. Hey, everybody. TG here. Let's see. September 30th. It's the last day of the month and last day of the quarter. And so looks like they're just going to be pinning the market today. There's a little bit of weakness out there, a couple strong names. You can see the internals, not that great, but really, market's just kind of going sideways today. So for us, that means we have a butterfly with a center strike of 66.45. And I fingers crossed. Hopefully, the market can kind of hang here for the day because we are up 174% on the remaining portion of that butterfly, which is amazing. That's pretty cool. So I'm enjoying that one. And then yeah, for the rest of you, we got a bunch of people out there on the social medias, like X, Facebook, LinkedIn, YouTube, all that kind of stuff. So anybody over there, just remember you can find me over at simplertrading.com/Moxie. Okay, Mirza, thank you. Looks like we're good to go. Eric, good to see you. Sunny, no mo FOMO. Still loving the coffee. So, yep, we got that. And yeah, you can see here the internals just haven't really been doing too much in through here. You can see here we've kind of been sliding a little bit as far as the advanced decline. Makes sense. Just the market gapped up yesterday into resistance. We shorted it. We got break even on the option because we went directional and it just didn't move fast enough to overcome theta. So call credit spread, which is usually what I do. Usually I do call credit spreads or put credit spreads. And in this case, that would have been the perfect setup. But I thought we were, with such a big jump up like that, I thought we were going to fall a little bit harder. So that's why I went directional and just kind of, break even. So, no harm, no foul. But yeah, you can see today we've got weakness underneath the surface, but they are just going to be pinning the SPX and the market like this. So we'll kind of go around the horn, look at a few other things. As far as the SPX, one thing to note, number one, we are exactly at the hourly 50, which was pretty much my target. And that's why we did the 66.45. Now, 66.50 is more of a round number, so maybe they pin it at 66.50. I think that's going to be close enough for what we're looking for that center strike on the butterfly. So I'm going to do my best to not get too antsy and actually see if we can hang on to it because, yeah, we're up to 174% gain on that one so far. And the only other thing is that we do have price over the hourly 50 and the Moxie indicator below zero. There keeps being a lot of talk about the market. A lot of people keep talking about, oh, is the market topped out? Like, no, I don't think the market's topped, but I do think we got extended into the whole rate cut news and all that, and we got a little bit of a sugar high, so the market continued to run up like that, and we got a little extended up here. So we put on what do we do? I think we put on a call credit spread, and that worked out nicely. We got 70% out of that. And then when we got the bottom, we put on the butterfly, and we got 80% yesterday, and now we're up to 174% on that today. So we've been doing this market as far as the SPX goes pretty well as far as these moves and catching these. And once we expire today, I'll have to decide if there's anything else I want to do because tomorrow, October 1st, started the new month and started the new quarter. The market could be unlocked and able to then start moving around, whether up or down. I'm kind of leaning towards down because I'm just not entirely sure that this market is really ready to rip to the upside. It could also chop. I don't know. It's really hard. I keep listening to some other people out there, and everyone's like, yeah, we should be seeing some downside. And boy, if we can sell off a little bit, then we'll probably sell off a lot. And it's just not happening yet. And I don't know. Maybe they need the calendar to kind of roll over in order to unlock some stuff like that. So just be prepared that there could be a difference between today and tomorrow because of the calendar situation. John Carter, I know he's thinking that if it comes down, we could be hitting 6,500. If we do come down to 6,500, that makes sense because you can see here that's kind of the previous range. Also, 6,500 is kind of a big round number. So we'll look at that. And then the other thing I keep pointing out is if we do look at the VIX and the UVIX, is that this thing looks like it's ready to go, and that's really the concern is that we have seasonal weakness in August and September, but we didn't really get it. In fact, September is going to be closing positive. And so we haven't really gotten any of that weakness in those. So I think people keep wondering, are we going to get a little, as Sam puts it, a little spooktastic surprise in October, with something to the downside for the market and upside for the VIX. And I do think we need to just be aware of it. We do have a squeeze. The Moxie indicator has been trending up, and we are. I mean that looks basically bullish. We do have the daily 8 over the daily 21, and price is now over the daily 50. So the VIX, if it wanted to go higher, is certainly ready to go higher. So I keep kind of looking at my positions and seeing if there's anything that I want to take off and what to do about that, so we can kind of make a run through. I'll be with you guys in the social media stuff for a little while, and then we'll close you down and come back over to the Moxie room and just do the Moxie only session. So we got that with the VIX, and you can see here that we do have the hourly 50 over the hourly 200, and again, this thing's kind of ready that if it wanted to go higher, it could. Doesn't mean it has to, but it could. And then if we look at the UVIX, not too much to glean here, except that actually, if I zoom out, the one thing I do want to point out is that the Moxie indicator here on the hourly chart has actually been staying above zero. So previously you can see up and then down, up and then down, up and down, but this looks like it is now building and sustaining itself over zero. So that could be, it could be a thing. And if you look here, we do have a double bottom. Now the UVIX is pretty tricky. Okay, because it can look like it wants to go higher, and then if the market doesn't really roll over, the UVX is not going to go up, and so this can be a tricky one. But I think it is noteworthy that this could be putting in a double bottom. Yeah, so there could be something there. Okay, I just want to make sure that I've at least communicated to everybody that if this market does come down, and if it's a surprise to anybody, just that we have been talking about it. Now, look, if it never happens, and if the market takes one dip and then mostly goes sideways and does sideways action for a couple weeks, then great, no big deal. But I just want to be prepared in case there's something else. And if we look at the put call ratio, the put call ratio is not really very effective on the downside, because in a bull market and in a good trend, it can stay down for a very, very long time. So it's not really helpful for that. But it is something to note that it is really darn low. And I don't know if of course, in hindsight, if the market does go down and this starts to trend up, of course, we're going to look at that and be like, oh yeah, we should have seen something. So again, I'm just going to be pointing this stuff out so we can be aware of it. The put call ratio is extremely low, and that could be marking a top, or at least if the market does go down, we can kind of point back and say, yes, the put call is very, very low. I find the put call ratio to be more effective at pinpointing lows in the market when it starts to move up. And so if we do get the market to come down, maybe add this to your repertoire and see if it's going to be doing something. Yeah, brighter side, I do think that I would imagine that if the market's going to come down, yeah, the UVIX is pretty much ready to go up, and it could probably spike quite a bit. Remember, my rule of thumb is typically we can see the UVIX move anywhere from 40 to 60% as a move. So, gosh, I mean, if we even just 40% brings it up to about 14, and that would be about to the daily 50 in this case, just a little over the daily 50. If you guys want to put on a hedge, probably not unreasonable to do and to think about. Just understand that the UVX is a little bit tricky, and it can move around. And if the market does not go down, the UVX can just continue to fade. So let's just talk about that. Yeah, we have a double bottom here and all that kind of stuff. And you can see a price, it's trying to move up a little bit. And maybe we get a little bump. But if the market doesn't really move down, or doesn't move down with force, this could kind of just bump around. And then once the market gets better, it could just fade away. And, that was the extent, So yeah, that's why I'm just saying it could be a little bit tricky. Just be prepared for that. And we don't know. However, if the market does have a pretty big drop to the downside, we could see this thing, spike up pretty fast, pretty quickly. Because I do think a lot of people are just looking at this. And the other thing, just to kind of be aware of, look at how much volume has kind of been persisting in here. Now, it's a little strange because you would think volume kind of also means that more people are holding it, but whoever's holding it has been losing money for a long time. So, maybe this is just a lot of transactions that are happening, but it does seem like there has been an increase in transactions over the last, I guess a couple months actually. Yeah, there's a lot of volume, but again, I don't know if there's much to say about that. It's kind of like when we're looking at the SOXS. This is the leverage, and this is the inverse ETF. There's been a lot of volume in this for quite a long time, but it hasn't bent anything, hasn't done anything. So that's not really showing us anything. Or if we look at FNGD, this is the inverse leverage ETF of the FANG stocks, and same thing. You can see a lot of volume, but it hasn't been doing anything, hasn't really been meaningful. So again, I don't know if that, I don't know. I don't know. Because yeah, you'd think, okay, increase in volume, but all these people have been wrong so far. Maybe they're doing it as a hedge. I don't know. And maybe this is finally going to change, which it could, because if you look at FNGD, we do have price now starting to engage with the hourly 50. So if this wants to go up, then that means FNGU and the FANG stocks go down. And just the only thing is that we have kind of seen this before. You know, tried holding the hourly 50 there, didn't hold. Tried holding there, didn't hold. Tried holding there, didn't hold. And yeah, you know, one of these days it's probably going to be different. And the question is that now? Maybe, maybe not. That's what we don't know. And yeah, and maybe it moves for a little bit, and maybe it doesn't go too far. I mean, that's kind of the question is, you know, is this going to be FNGU? Is this going to be like Chicken Little, and is the sky falling, or is this just the markets are up a little bit? We need to take a bit of a dip, and that's it. Or you know, FNGU, does it kind of just need to work its way back down to here? And you know, sure, maybe it's going to take a little kerplunk, and then we kind of work our way back up. This is all really, really tough to see and to say, because we've also been in the situation where it sure looked like the market was going to roll over, and all it did was take a couple dips and mostly flag sideways. So I'm going to be a little bit on the cautious side as far as getting too aggressively short. If anything, I rather take profits and get defensive as far as you know, making sure you're not overly leveraged on the long side and taking some risk off. That way, you have some dry powder to work with if the market does dip. Yeah, that's about it. That's what I would be looking at and saying. So, and then if we look at SMH, this is the semiconductors, and I do think that this is a little bit high. And again, this is continues to persist outside of that third ATR, just up on the third ATR on the daily chart. I could totally see this thing pulling back. You know, usually we'd be looking at the daily 21, so that would be a little bit, you know, a little bit of a move to the downside. But we'll have to see it actually happens and when it happens. Yeah, and that's kind of something to consider. But remember, if we do get a dip, I think it's going to be a buyable dip. And so, you know, just, you know, it doesn't mean you have to get out of everything. I just think that we're probably a little high, a little extended, and we probably need to pull back a little bit. But the pullback should be a good thing. And so we'll see how that kind of all looks. And then we can look at the IWM. I don't know if it was Caleb, but somebody else, a couple of you guys were asking me about was it, man, it's been forever since I've traded these names, but TZA or TNA. Yeah, Caleb. So TNA, you know, and I think we talked about it right here just before the interest rate cuts and all that kind of stuff. And yes, sure, there was a move up. You know, small caps love rate cuts, but if you're trying to go long, especially on a swing basis, anything more than just kind of a short-term basis, you're basically getting in at the top of this really, really big move. Also, right here as price comes into the previous all-time high. Now, yes, we've gone over it, but we've all, if you've been around the market at all, you know that price can kind of pop its head up above a new high and then come right back down. It's kind of like a game of whack-a-mole. So that just because it made a new high doesn't always mean go with it right now. It can just mean like momentum kind of pushed it and then it comes right back down. So yeah, okay, I see that you're out. I just want to make sure that anybody else who's kind of looking at trading IWM and stuff like that was just cautious, because I didn't think that this was really the best place to get aggressively long, especially for a long term. I think that you could do better. You know, things like that. Pull back to the daily 50, pull back to the daily 50. What if we do pull back to the daily 50 on the IWM? That would be a much, much better location to really get into something like this. Plus, if you look at the hourly chart, the hourly Moxie indicator has not really been that great over the last few weeks. And now we're starting to get price underneath the hourly 50. And I don't know. You could see here there's a dip and there's a dip and we got a dip and well that was just a little dip, but here we are underneath the hourly 50. So we could be seeing a little bit more downside. And as I said in the beginning of all this, that's really what I'm struggling with is trying to figure out okay, what is this going to look like? When's it going to go? And this could be the calm before the storm because end of the month and all that stuff, they're just going to hold it. And then once the calendar rolls over, then they can do whatever they want to do. So we've seen that a few times this year. No, and then RSP mostly hasn't been doing anything. Maybe that's a good thing. I don't really see too much of a problem. Maybe it could dip a little bit further, but you can see it's kind of been treading water sideways. And ARKK, this is looking almost a little excessive. I'm very surprised that this was able to bounce right back up to what it did. We did talk about it getting excessive up here. We did get the pullback, but boy, it's right back to where it came from. So awesome. So I don't really know what to say about this one. Maybe it's gonna chop around sideways a little bit, but yeah, that was pretty cool. Nice bounce off the daily 21, which is why we went long on the SPX a few days ago. So okay, well, I see that the eyeballs over there over at on the social medias has grown pretty well, and I'm gonna wrap up with you guys over here. That was kind of a nice rundown for the market. As I said, our butterfly, we're up to 189%, just flipped over. So 189%. This percentage wise, if we really do close around 66.45 or even 66.40, that could be a pretty big percent gain. But we're going to just have to wait and see how this thing really works out for us. And yeah, yeah, Andrew, we'll get the kaleidoscope of butterflies. It'll work out nicely for us. So other than that, you guys over in the social medias, I'm going to wrap up with you guys. Remember simplertrading.com/Moxie. And then let me come back over here for the Moxie group and we'll be there for a few more minutes.